Hello everyone, and welcome back to Dr. Tao's Quant Lab. In our previous sessions, we mapped out the fundamental gravity of the Mega 7 and highly requested tech and growth stocks. Today, we are pushing our valuation matrix further to look at a cross-section of value titans and AI infrastructure leaders. Our wish list today features 7 phenomenal companies: ASML, Berkshire Hathaway, Intuit, Micron, ServiceNow, Palantir, and Walmart. In this episode, we are going to use our strict forward-looking expected target model across the board. By doing this, we are going to visually expose the exact moment a stock abandons its fundamental gravity and transitions into a pure momentum story-driven asset. Before we dive in, please note the disclaimer on the screen. This is an independent educational project. The views expressed are my own, and this is strictly for educational purposes, not financial advice. For those who want to study the underlying mathematics of these models, please refer to section 1.7 of the main Quant Lab course. Let's quickly review how to read the dashboard. We mapped out a stock's gravity using 3 core segments. Range 1, the blue box, is the deep value floor. This is the absolute worst case scenario pricing based on forward estimates. If a stock falls in here, it is experiencing a massive capitulation. Range 2, the red box, is the expected target. This is our core fundamental fair value zone based on normal market multipliers. Then stat range, the purple box, is the micro-statistical boundary. This uses a P plus and minus 1 standard deviation band over the last 90 days to show us the immediate short-term momentum. At the bottom of each matrix, we track 3 specific dates: the last report date, the next report date, and the statistical analysis date. Never trade on obsolete data. Let's apply this to the market. We start with ASML, the monopoly of the semiconductor equipment world. The current price is about $13-17. Right away, the chart tells a massive story. The current price has completely blown past its fundamental expected target. The red box capping at around 1250, and is riding high in its purple 90-day statistical momentum band. So the insight is that ASML is no longer trading on strict fundamental gravity. It is trading on a massive AI infrastructure premium. For left side value buyers, there is no setup here. You need to wait for some value around the left-hand side of range 2. For right side holders, this is where you must rely heavily on trailing stops, because the fundamental floor is a long way down. Moving to the ultimate value anchor, Berkshire Hathaway. The current price is $480. Berkshire is the quintessential low volatility value titan. Notice how incredibly narrow its purple 90 days statistical range is. compared to a tech stock. More importantly, look at where the price is sitting. It has dipped below its short-term purple band, while resting safely inside the lower half of its macro red box. So the insight is that Berkshire has cooled off in the short term, but remains perfectly anchored by its long-term fundamentals. It is trading below its medium target, 532. This is a textbook mathematically sound accumulation setup for a left-side value buyer looking to add fortress to their portfolio. Next is Intuit, representing our mature software compounders. The current price is $455. Because it is enterprise software, we must introduce the Wall Street illusion, the orange box, representing Wall Street's adjusted non-GAAP targets. The insight is that the current price for 55 sits inside the historical GAAP target, range 2, while resting exactly on the floor of the 90-day macro stat range. Compared to Wall Street's inflated non-GAAP expectations, the orange box, the stock actually looks discounted. So the strategy might be this is a mathematically sound fair value zone, offering a great risk reward setup before it potentially climbs toward Wall Street's non-GAAP targets. Now let's look at macro. The current price is 420. Macro manufactures memory chips, meaning it goes through a brutal boom and bust cycles. We cannot use historical cyclical P here. We must use a forward-looking structural shift model. Applying AI industry state of nature estimates, just like we did for NVIDIA. The insight is that Macron is shifting out of its historical cycle and into the AI infrastructural paradigm. The current price has just popped above its 90-day micro stat range, showing strong short-term momentum. Despite the short-term breakout, the stock still has massive room to run before hitting the floor of our forward-looking range 2. This suggests significant upside potential if the hardware cycle continues. Okay, so moving to ServiceNow. The current price is 110. This chart is the perfect bridge between the enterprise software and the Wall Street illusion. ServiceNow uses massive stock-based compensation, making its strict GAAP earnings, the red box, look tiny compared to its adjusted numbers, the orange box. The insight is that the stock is trading in the 110s, while its strict GAAP fundamental target is in the 60s. However, the current price is sitting right at the bottom edge of both of the purple stat range and the orange non-GAAP target. So even under Wall Street's inflated rules, the stock is currently at a critical short-term support level. If it breaks below 112, momentum traders must exercise caution. Let's look at Palantir. The current price is 150. This chart is visually striking. Just like ASML, Palantir is trading completely detached from its fundamental gravity. Look at the massive empty void between the red box, where the fundamentals says the stock should be around $30, and the purple box, where the momentum actually is above 140. So the insight is that the Palantir is acting exactly like Tesla did during its massive breakout years. It has transitioned from a company valued on current earnings to a storage stock valued on pure retail momentum and future AI market share. Strict left-side value bears cannot touch this. For those already holding, you must rely entirely on right-side dynamic trading stops to protect your capital. Do not let a deflating hype bubble drag you back across that massive void. And again, all of these insight strategies are work for value investors, not short-term speculators. Finally, we turn to the defensive compounders with Walmart. The current price is 119. This chart offers a brilliant lesson. You would expect a defensive retail giant to sit perfectly inside its fundamental red box, much like Berkshire Hathaway. Instead, Walmart's price, 119, is well above its range 2 max of $92, sitting comfortably inside its purple momentum band. And the insight is that the market is paying a massive tech-like premium for Walmart's safety and retail dominance right now. It has detected from its standard retail multiples. This is strictly a right side momentum holding in the current environment. Left side value buyers must remain patient and wait for the broader market pullback to bring it back to reality around this area. That wraps up our analysis of the value titans and AI infrastructure leaders. This file will not be shared in my personal website, but feel free to screenshot. Okay, so in conclusion, today we saw exactly how powerful the expected target model is for exposing when the market stops caring about fundamentals and starts paying a massive momentum premium. While companies like Berkshire Hathaway and Intuit remain grounded, giants like ASML, Palantir, and even Walmart are flying in the statistical momentum zones. If you want to master these models yourself, all the notes are available in section 1.7 of the Quant Lab. Thank you for watching, and I will see you in the next section.